Hey everybody, welcome to my channel. Today I want to talk about ASTI, Ascent Solar Technologies. I have been getting comments like crazy over the last week or so asking me to do a video on Ascent Solar, and they came out with their Q3 2020 results a couple of weeks ago. So I thought I'd go through those results today in this video. I also have some additional information about Ascent Solar that I found out here recently as well about hiring. So I'll talk about that too after the financial results. So let's get right into their Q3 2020 10Q. All right, so here's their 10Q for quarter ending September 30th, 2020. So keep in mind this company was behind in their filings with the SEC for about 2 years. Now they went dark during that time, so they weren't producing anything, and they're trying to get caught up with their SEC filings. They hired a new CFO at the end of last year, and so he's doing a really good job just trying to get them caught up right now. So I mean, as of this time, I mean, all they have to do is furnish their year-end 2020 10K, and they're all caught up at this point. So kudos to the CFO there that's doing that. So let's go take a look at some of the financials first off, and let's take a look at their balance sheet. So as of the end of September 30, 2020, their cash and cash equivalents were just over $1 million. Now, if you go back and we look at my other videos talking about their 10 Qs before that, I mean, they had no money on their books whatsoever, but they did get an influx of money in the third quarter from some additional financing that they did. Now, also, they had about $5,000. I know that's not very much, but they do have some trade receivables on here, which kind of tells us that they have furnished some type of product, at least, that they have money owed to them anyway. A couple other things I found kind of interesting is, so they have the operating lease assets for about $5.7 million. So the building that they own got foreclosed in 2020, and then they turned around and started leasing that from the new owner. So that's what that asset there is for. And then you can actually see the other side on liabilities down here. So they have like the non-current operating leases that are like long-term, and then they have a current portion here. So that's what kind of adds up to those operating leases there. And then also, that's something that's kind of interesting. I talked about this on a previous video, but they have these embedded derivative liabilities, and they got released. And so we'll see that on the income statement, because they actually show net income, which is kind of monopoly money in my personal opinion, but we'll go take a look at that here now. So revenue for the third quarter was only $6,000 compared to $338,000 from the prior year. Now keep in mind that according to the 10K for 2019, they only think they had like 12 employees at the end of the year. So that's it. So we kind of knew going into 2020, not a whole lot of stuff was going on. I mean, they were struggling financially. That's why they lost their building. So, I mean, this is, we kind of knew what was going on here. And this is the derivative liability piece that got moved off the balance sheet and hit other income. So it's kind of interesting. So for the quarter, they show a $2.5 million net income, and then actually $7.6 million for the year. That's not cash. That's just kind of monopoly money, I guess you'll say, because it's non-cash adjustments to their income statement. And as far as cash flows go for the quarter, they had about $7.6 million. So that's that net income. And then they have all their non-cash adjustments here. And basically they had an operating loss of about $1.4 million compared to $2.5 million from the previous year. But again, they really didn't have a whole lot going on for the year just in general. All right, so as far as financials go, I mean, there was really nothing there that was surprising to me. It's pretty much kind of the same what we've seen the last couple of quarters. But I went through the management analysis section of the 10Q, and there's a couple of things that stood out to me. And if you're a shareholder, it would be kind of interesting to know. All right, so the first thing is, so I said in 2019, Ascent completed a repeat order from the same customer who has since established its airship development operation in the U.S. In 2020, Ascent received a third and enlarged order from the same customer and is scheduled to complete the order in March 2021. So I'm actually interested to see how much that was. They have to get done with their 10K first for 2020, and then they'll come out with their Q1 for 2021. But they had at least looks like some type of order going on that they were trying to complete, which was part of that trade receivable, I would imagine, that was we saw on the balance sheet. All right, so here's some other interesting things about the results from operations. So this is kind of what the company is telling us. Management believes our factory is currently significantly underutilized, and a substantial increase in revenue would result in marginal increases in direct labor and overhead included in the cost of revenues. As such, management's focus going forward is to improve gross margin through increased sales and improved utilization of our factory. We are currently pursuing high-value PV markets. So what they're trying to say there is that their building that they are leasing right now, I think it's around 160,000 square foot building. They're leasing about half of that, or just over half of that, and they're only utilizing a very, very small portion of that facility. So for example, if they were able to get a large order coming in, they would easily be able to accommodate that order, and they wouldn't have much increase for direct costs for the company because they already have the room established there already. So that, I mean, at least they're ready to go in case they do get a large order coming down. And then we kind of already talked about this, but their other income was $3 million, but that had to do with some gain on their sale of their facility and settlement of the derivative liabilities on their balance sheet. All right, here's another interesting part of their 10Q, which they talk about liquidity and capital resources. So the company says they have continued limited PV production in its manufacturing facility. The company does not expect the sales revenue and cash flows will be sufficient to support operations and cash requirements until it has fully implemented its product strategy. During the 9 months ended September 30th, the company used $1.4 million in cash for operations, which we saw in the cash flow. Additionally, our additional projected product revenues are not anticipated to result in positive cash flow position for the years 2020 and 2021 overall. And as of September 30, 2020, the company has negative working capital, which means basically they have more current liabilities than current assets. As such, cash liquidity sufficient for the next 12 months will require additional financing. So what they're basically telling us is that they don't have enough revenue coming in to be able to self-sufficiently pay for their bills that are to occur even in 2021. So they're basically telling us to expect more equity sales, whether they're trying to get that through maybe private equity sales or drumming more equity up through common stock sales. And that company says they continue to accelerate sales and marketing efforts related to its military, solar products, and specialty PV application strategies through expansion of its sales and distribution channels. The company has begun activities related to securing additional financing, which I kind of just talked about, through strategic or financial advisors, but there are no assurance the company will be able to raise additional capital on acceptable terms or at all. If the company's revenues do not increase rapidly or additional financing is not obtained, the company will be required to significantly curtail operations to reduce costs or sell assets. Such actions would likely have an adverse impact on the company's operations. So we kind of saw that in 2020 anyway. I mean, they basically let go of like 90% of their employees by the end of 2019. They curtailed their operations. They didn't do much in 2020. And so they're kind of saying that may continue into 2021. Now they did do some stock offerings. Obviously they got some equity offerings from, I think it was Tube Solar and CrowdX. So I'm interesting to see, at least the Q1 financials for 2021 to see where their cash is, but they're actually in a better shape than when they were back in the third quarter of last year. So I know there's not a ton of positive things that are coming out of this, but it's really nothing that we didn't already know about anyway. And the company saw some improvements going into the end of 2020, with the tube solar connection, and then also being able to hire some more management for the company. And not only that, but the company also talked about having a NASA demonstration and a launch of their product in 2022. Now, I thought the demonstration was supposed to be around May of 2021, which would be this month, but I'm not finding any additional information. I'm surprised the company hasn't come out and talked about it at all, because I think that would be some really good PR that they could do for the company, unless that demonstration got pushed out. But again, we don't know what the revenues that are associated with that NASA demonstration and also the launch that's going out to 2022. But some interesting things that I found outside the financials on hiring I want to bring to your guys' attention. So I found this information on Indeed, and they are hiring people right now. So they're hiring a laser technician, they're hiring a mechanical drafter, they're hiring a metrology engineer, a chemical bath deposition process engineer. So they are trying to bring on people that would help them on their manufacturing lines and also their R&D. So I think that is a positive sign that they are bringing people on, or at least trying to hire these people coming in. So if the company wasn't expecting to at least start ramping up, even if it's a small ramp up, they wouldn't be hiring these people, in my personal opinion. So I think that is very positive news. Not only that, but I'm really interested to see what their earnings are for Q4, especially Q1 of 2021. According to Earnings Whispers, they say that they think that Ascent Solar is going to come out with earnings on May 20th. Now, this isn't always accurate. This is just kind of what they think is going on. It's kind of funny. I was in here in the last week and they thought it would come out on May 13th. So they've already changed it to May 20th. But, I'm hoping that they'll be able to come out with their Q4 financials, or I guess it'll be all of 2020 financials, here in the next week and a half. And if they do, I'll report on that as well. All right, so those are the main topics I want to talk about today for Ascent Solar. So we went over their Q3 financials for 2020. We also found out that they are hiring individuals, so it looks like they might be starting at least slowly ramping up their facility, which is a really, really good sign. Then we also found out from Earnings Whispers they may be coming out with their Q4 financials here in the next week and a half, but I'll definitely keep you guys apprised of what's going on. If they come out with any information, I'll make sure to report on it. And thank you guys so much for watching. I would love to hear from you guys in the comment section. What do you think about Ascent Solar? What do you think about these financials? Do you think they're getting ready to ramp up for some big things that are coming up? I'd love to hear from you guys. I'll catch you guys on the other side. Take care and God bless.